In China, the speculation is that they have more. So yeah, it could be have a huge impact. I'm not sure China would care about because just by announcing, or maybe they won't announce, like Paul said, but the more China becomes important in the gold market, I don't think they really care. I think the price of gold will tell this. The United States, through the IMF and World Bank, they've discouraged countries from having gold. I think isn't it the IMF or the IMF even? Yeah, they don't allow member countries to back their currency with gold.
I think that's the case. Yeah.
But now China is saying, well, we don't want to be part of this. We want to use gold and we want to back our currency.
China's methodical approach to gold accumulation represents one of the most significant shifts in global monetary strategy in recent decades. According to macroeconomic analyst Mario Innecco, who closely tracks precious metal markets and sound money principles, China's actual gold holdings likely far exceed their official disclosures, a strategic opacity that could reshape international finance if fully revealed. The official numbers tell only part of the story. China's central bank has maintained a consistent buying pattern, increasing gold reserves for 7 consecutive months through May 2025. The People's Bank of China reported holdings of 73.83 million fine troy ounces by May's end, representing a modest increase from April's 73.77 million ounces. Throughout 2025, the PBOC has officially purchased 16.8 tons of gold, continuing a pattern of steady accumulation that has persisted for years. However, Innecco suggests these figures represent merely the tip of the iceberg. The speculation surrounding China's undisclosed reserves centers on the potential for a dramatic announcement that could fundamentally alter global currency dynamics. Should China formally declare substantial gold reserves backing the yuan, the implications for international markets would be profound, potentially challenging the dollar's dominance in global trade and finance. China's strategy extends far beyond simple accumulation. The nation has systematically gained control over critical components of the global gold infrastructure, transforming from a regional player to the dominant force in gold refining. Their market share in this crucial sector has doubled from 40% in 2015 to approximately 80% today, giving them unprecedented influence over the physical gold supply chain. This dominance has been complemented by the strategic development of major LBMA-approved vault infrastructure centered in Shanghai, further consolidating their position in the physical gold market. The approach reflects what Innecco describes as a sophisticated understanding of market dynamics. Rather than engaging in confrontational demands for proof of U.S. gold reserves or other symbolic gestures, China appears content to let market forces reveal underlying truths. As their influence in gold markets grows, the price of gold itself becomes a powerful indicator of shifting global monetary confidence. Before we begin, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by clicking that button now.
Back during the gold standard in the 19th century, the pound sterling was the major reserve currency, was the main currency, and it was basically the banking system in the UK kept about 33% of the money supply, or the whole credit system was backed by gold. And it doesn't have to be 100% because you buy and sell between countries, you make a small profit, and then you have a surplus or a deficit, so you don't have to have the full amount. The other thing is, I think China has a lot more gold than the 2,300 tons that they officially publicize. And so that's how you can and maybe, that's how you back the yuan. What it means is that whenever you have a surplus with China, you can either take those yuan and buy Chinese goods or invest in China, or you can also go and get your gold. And that hasn't been the case since the early 70s when Nixon closed the gold window. They've encouraged people to hold on to debt, to treasuries. And I don't think that's what the Chinese are encouraging people because they want to get off this. Maybe some people will hold Chinese government bonds, but I think they're focusing more on gold. I would say that the United States, through the IMF and World Bank, they've discouraged countries from having gold. I think, isn't it the IMF, Paul, or the IMF even, they don't allow member countries to back their currency with gold.
I think that's the case, yeah.
So, but now China is saying, well, we don't want to be part of this. We want to use gold and we want to back our currency with gold. And COMEX is not a physical market, even though this year there's been a lot of physical activity. COMEX was created, if you look at the WikiLeaks file from 1974, the Treasury Secretary, the Secretary of the Department of Treasury, the Department of State, and the bullion dealers in London decided that the best way to make sure Americans didn't buy gold and hoard physical gold was to have a futures market. But anyway, there's a super chat here from Chris Conman. Thank you, Chris. And he says, Paul, after China announces their gold holdings backing their yuan, will they then ever call the US out on their 8,000 tons of gold? What would happen if they couldn't produce it? Thanks. Yeah, that's really interesting because for the US, there's all this doubt, and it's not just like people that are not in the US that doubt this 8,000 ton. Well, it's 8,130, I think, ton amount. Americans as well. I mean, even Trump some months ago questioned it, and there's all the talk by Elon Musk that we're going to do an audit, but that's gone out the window. And in China, the speculation is that they have more. So yeah, it could be have a huge impact. I'm not sure China would care about, because just by announcing, or maybe they won't announce like Paul said, but the more China becomes important in the gold market, I don't think they really care. I think the price of gold will tell the story. I'm not sure they're into like this kind of how can I say, show us your gold and things like that. Maybe I could.
Central banks continue purchasing gold regardless of price levels, following patterns established during the Great Depression. Mario Innecco notes that Benjamin Roth's diary from that era documented strong gold demand even as prices rose. People prioritized security over cost during market collapse and deflation. This historical behavior mirrors today's reality. Despite gold reaching $3,505 per ounce in April 2025, central banks maintained their buying programs. The World Gold Council reports official sector purchases have exceeded 1,000 metric tons annually for 3 consecutive years, the highest sustained demand since the 1960s. Current economic conditions support this trend. Rising inflation, combined with low interest rates, creates an ideal environment for gold, as real returns on traditional investments decline while currency debasement concerns grow. Even during deflationary periods, gold retains appeal as a crisis hedge, demonstrated by Depression-era demand patterns. Central banks view gold as monetary insurance rather than a commodity investment. Their willingness to buy at record prices indicates they prioritize gold's strategic value, protection against currency instability and geopolitical risk, over short-term pricing considerations. Let's get back to the interview.
Someone is asking here, Paul, will accumulation of silver by the Russian central bank spread to other central banks? Yeah, I saw last year they announced they're buying silver and platinum as well, I think, or could be palladium. I don't think they're buying huge amounts, but who knows? Yeah, maybe silver will again be accumulated by central banks, especially if the price goes up a lot, like into triple digits. It could be a good reserve to have. Someone's saying here whether there's tax on gold to buy gold in the UK. No, there's tax. There is VAT on silver, which is 20% at the moment. But the first time I bought silver, yes, there was VAT, and I was a bit miffed. But at the time, it was below £4, and now it's like 27. So So that 20% is irrelevant, like not irrelevant, but it's insignificant now. And I think it's going to be the same thing. I don't think it should stop people from buying silver, the VAT in the UK. As per capital gains tax, that if you buy coins of the realm, coins minted by the Royal Mint, there's no capital gains tax in gold or silver, which I think is great. And not many people know about that. And financial advisors, of course, they never advise people to buy real physical. I saw Bert Doman. He's an older gentleman. He was born in Germany during the war, and he's been investment advisor for like since the 70s, and he got into gold in the bull market. He got out in 1980, and he recently spoke to ITM Trading, to Daniela Cambone, and she asked him about the US gold, and he thinks that they actually ran out of all the gold they had, and that's why Nixon had to close the gold window. So he doesn't think they have any. And the thing that he said that makes sense is, if they had all that gold, why can't they just do the audit? Is that central banks, they don't really care too much about the price. They'll just keep buying. And the other thing is, well, Paul, I was reading some months ago the diary of Benjamin Roth. He's a lawyer during the Great Depression. And it's interesting that he talked about the fact that demand for gold was really huge, even though the price was going up, because everything else was collapsing, even during a deflationary depression. People want gold because companies are failing and they don't really care much about price. A lot of people here are asking, oh, how, what good is it to peg a currency if you have to unpeg? But as Paul said, they're not going to try to peg it. They're just going to leave it floating at the market. I mean, I had heard of this as well, Paul, that they're even thinking the Shanghai Gold Exchange, that they're trying to open also a depository in Saudi Arabia.
Yes,
I think they could
that's
open
true.
elsewhere as well, the countries that they trade with the most. But what I would say as well is that eventually, if this gold settlement system increases, I would say that the relationship between the yuan and gold and other currencies and gold is actually probably going to stabilize a little bit. And it's maybe they're doing it the other way. Instead of fixing the price, they're just going to let the market and trading conditions set like a band. So yeah, maybe that's what they're thinking.
Gold and silver continue to assert their role as reliable stores of value amid increasingly complex and shifting economic landscapes. Whether during periods of inflation, deflation, currency devaluation, or heightened geopolitical uncertainty, their appeal remains strong as central banks, institutional investors, and individuals alike seek safety and stability. With gold trading near record highs and silver gradually attracting renewed interest due to its dual role in industry and investment, both metals remain essential components of long-term financial resilience and strategic portfolio protection. Will silver's momentum outpace gold in the next major breakout? Share your thoughts in the comments below. If you found this insight valuable, don't forget to like, share, and subscribe for more updates on the gold and silver markets. And remember, 97.4% of viewers haven't subscribed. Join the 2.6% who have by hitting that subscribe button. Thanks for watching.